Hey guys, anyone out there that's about to jump into the stock market for the first time or just getting their feet wet with investing, I'm about to give you my top 5 beginner investing mistakes to avoid. These mistakes are not only some of the worst that new investors could possibly make, but unfortunately they're also some of the most common. But before I get into my top 5 list, be sure to subscribe and smash that like button. I mean, after all, I'm about to save you a bunch of time and money and heartache, so I think that's the least you could do, right? All right, so starting out, my first big mistake that most new investors make is either having no plan or generally just having a poor plan when it comes to investing in the stock market. And one thing that you'll notice with seasoned, experienced investors that have long-term success is that they're very strategic with any position that they're opening within their portfolio. They know what their time horizons are, their risk tolerances, their entry and exit points, their volatility, risk appetite. All of those things are covered and more. And unfortunately, new investors seem to have this sense of euphoria when they're first getting into the stock market, and they're excited about just jumping in and buying stocks and making money overnight and seeing everything go up and up and up, and they really don't take the time to do any proper planning. And if the greatest and the best are out there doing their homework and the professionals are putting their time in, doing their homework and making sure that everything is just as it should be before they enter into a position, then how much more should young investors also do their homework? And generally, whenever you just start chasing stocks around and trying to find the one that's trending the best, it generally doesn't work out. More times than not, you'll end up selling too low and buying high. And of course, that's just a disaster waiting to happen. And not only that, you're going to be paying increases in fees. You're going to have short-term capital gains on anything that you do actually happen to make money on. And it's just really not a good strategy at all. Also, many times new investors don't consider the appropriate time horizons with the type of investments that they're getting into. They're looking for that instant gratification, as I initially mentioned, and whenever that doesn't happen, again, they exit those positions too quickly, or they may just not consider the type of volatility that comes with certain types of investments. Again, it's sometimes infectious for new investors to follow the hype stocks that generally have wild swings, and unfortunately they don't realize, with the big swings upward, also come big swings downward, and they don't have the stomach to take on that volatility. So generally, it's just never a good idea to enter into any position if you don't have a plan in place and truly understand what it is that you're investing in. All right, moving on to my number 2 mistake, and that is following the herd. And so often we see this as an alternate for young investors to think that they're actually doing their homework, when in fact they're just following the herd into a new investment because they're reading a lot of blogs or message boards in regards to different ones hyping up the stock and pumping this out there to move into it as a safe or a lucrative investment. And one of the greatest examples I can think of for following the herd was what we've seen with Bitcoin over the last year and a half or so. And I'm not saying that Bitcoin is either a good or a bad investment. That's not my point. But if you remember back in late 2017, Bitcoin was just going crazy high. And it seemed like every day you were just seeing article after article after article about Bitcoin this and Bitcoin that, and you hear blog posts and read about people that have just made millions of dollars and quadrupled their investment on Bitcoin. And of course, that led to a lot of people buying that upswing up there that really didn't understand what Bitcoin was or why they even needed that in their investment. But as we've all heard the term fear of missing out, that's a real thing. And whenever you see everyone else around you investing in a certain product or a stock, and see everyone making money around it, then you start to question why you're not in that stock. And the problem is whenever you forget about doing your homework, forget about planning, and you just blindly enter in and follow the herd and become a sheep, as it's so commonly termed, you really get stuck with an investment a lot of times that's already seen its greatest increases. And then whenever it stops going up, well, then you're just stuck with a position that you really don't understand. And so Again, going back to my Bitcoin example, think about all the people that bought while it was, nearing the top towards the end of 2017, even after that. And basically right now, I think it's about a fourth of the price what it was back at its highest point just a year and a half ago. So I'm sure, unfortunately, there's a lot of people that fell victim to this number 2 mistake that are still holding a lot of Bitcoin out there. And again, I'm not saying it's either a good or a bad investment, but whenever your entry price is up there near the all-time high and it's down about a quarter of what it used to be, then generally that's a losing proposition. All right, and my number 3 mistake is shirking your homework, or basically not doing your homework. And this kind of ties in with my previous 2 mistakes, but this one's a little bit different. It doesn't necessarily mean you don't have a plan going in. It also doesn't necessarily mean that you're just following the herd. But by not doing your homework, you could invest in a company or a stock that you really like and you really trust their products or their services or whatever it may be. But there are a lot of good companies out there, a lot of solid companies that the financials just don't make sense to invest in at certain price points. It might be overvalued at the time, and there might be technical analysis that's pointing that this stock is going to go lower. So it definitely pays to at least have a foundational understanding of certain financials and also being able to read certain charts, just to get a general idea if there's a stock that might be a little bit overpriced. Maybe there's a better entry position at a potentially a later date that you might be able to jump into, and just truly understanding how that company or how that position compares to other similar stocks in a similar industry, because there might be better alternatives out there. All right, number 4, and while I believe that all 5 of these mistakes are very important to try and avoid, this one might be the most important one, and maybe I feel that way just because I was guilty of this one early on, but that's ignoring taxes and fees. So I'll give a personal example of this one just to kind of make it more real. Whenever I first started investing, I was really interested in learning the ins and outs of day trading, and so on a smaller scale, I wanted to really learn what that was like, and so I began finding positions that I liked, and I would invest in them, and I would just watch it all throughout the day, and then I would try to jump in and out of positions, making money here and there. I was buying and selling options contracts, and for a while there was times where I did fairly well with this. And I was, really happy with seeing my investment account, the balance going higher and higher and higher with it. But unfortunately, whenever tax time came around, I had to pay well over 20% in short-term capital gains because I was constantly buying and selling positions. And I really just didn't give much thought to what kind of taxes or what kind of fees I was paying. And unfortunately, like many of you today, I didn't have a Robinhood account, so I was paying $7 every time I bought or sold a position, and then even more than that every time I opened and closed an options position. So it wasn't until I started doing my taxes that next year that I really saw how much of my profits were going to Uncle Sam, unfortunately, and also just how much I paid my brokerage house in fees. It was completely outrageous. And my number 5 mistake that I hope all the new investors out there can avoid is falling susceptible to overconfidence and thinking whatever type of beginner's luck that you've had in the stock market is a reflection of your prowess as an investor, and not actually just realizing that sometimes there is some dumb luck when it comes to investing in the stock market. And while having confidence is a good thing, you need to have confidence in the right things. As I mentioned, if you're someone that actually is doing their homework, then you can have confidence in your positions and knowing that you have done the research and truly understand what it is that you're investing in, and you have a basis of a belief for a foundation as to why you feel that those positions are going to increase over time. But if you're just picking stocks for essentially no reason, just because they're the hot new stocks or because your friend suggested it, or you read a blog about a certain position is supposed to double in a given year or whatever it may be, sometimes there's that false sense of security that whenever you start to see a little bit of success, that you start to feel like, oh, well, I completely have this down. I know exactly what I'm doing. And where that gets dangerous is that whenever you start to become overconfident in yourself, then you start getting into riskier investments and you start to become a little bit dissatisfied with those peanuts that you're making from the beginning, and you start to think of yourself as someone that if you're having success down here on the bottom, well, then you can start getting into more exotic trading strategies and taking on more risk. And unfortunately, whenever we see those big swings upwards and those stories about people that doubled or tripled their money in positions overnight, unfortunately, more times than not, there are 1,000 other cases for each one of those success stories about someone that lost everything. And that's what happens whenever you start to have overconfidence in yourself and don't have a basis for that overconfidence and don't truly understand what it is that you're doing. Is that even though you may have some short-term success over the beginning stages of your investing career, that all it takes is one bad trade, all it takes is one bad position to essentially lose everything or lose the majority of your portfolio. So it is so important to just make sure that you keep everything in perspective. You understand exactly what your level is whenever it comes to the stock market. If you're a beginner, that's absolutely fine. We were all beginners at one point. You know, Warren Buffett was a beginner at one point. But the important thing is to realize that you're a beginner and to make sure that you're increasing your knowledge. Make sure that you're always understanding what it is that you're getting into before you invest it, before you start putting your hard-earned money into any position. Just truly make sure and truly understand that you believe in what you're investing, you have a foundation for that investment, and that you can be secure going forward, that investment is something that you truly vetted out and can have confidence in. All right, guys, so those are my 5 big mistakes that I want all of you new investors out there to please avoid. Unfortunately, I was guilty of some of these myself. And so if there's anything that you could possibly learn from this video, is learn from me that these mistakes are very real. They are very common. And so take them to heart. You know, don't think that you're the exception to the rule and that you can get around these things. And please remember to subscribe below and let me know what other mistakes are potentially out there. There's a whole world of traps that new investors can find themselves into, unfortunately. So there are many more that I didn't cover in this video. So if there are other mistakes down there that you feel that all the young investors out there should know about, please comment below and let me know what you think. I truly appreciate your feedback. And as always, guys, until next time.